Hello everybody, my name is Joseph Greenspan. I'm president of First Fidelity Home Mortgage of Wisconsin. Listen, we've been a lender in the state of Wisconsin for just over 15 years, and we are located in Waukesha. Listen, the reason for this chat today is explaining as far as how people can take advantage of the low interest rates. You know, a lot of times people say, okay, I got a higher interest rate and I want to lower it. What impact is that going to have on my situation? Or some people have had a lot of questions where they're like, you know what, I've been in my mortgage for 5 years. I can refinance at a lower interest rate, but then I'm going to extend out my payments for another 5 years. So they're going to like lose that extra 5 years. Or if they look to pay off some debt with it, they're stretching it out over a longer period of time. So I wanted to clarify some of that information for everybody here so that it makes more sense to them as far as on why it's important to take advantage of these lower interest rates. I've been in residential lending for close to 20 years. Prior to that, I used to be in business lending. And you ever see the news stories where they talk about a company's having problems, they hired some big shot executive to come in and they're going to do some debt restructuring, and they're going to pay this guy millions of dollars to come in and do this for the company. Well, you know what? When you're operating, you're a homeowner, you're kind of the CEO of your own little personal company, okay? And that's the way you need to look at it. And really what the issue is and what they look to do is increase cash flow. They want to have better cash flow, because if you have better cash flow, you can accelerate. The key here is accelerate the payoff of debt. So it's not necessarily that you're going to be stretching it out an extra 5 years. The thing is if you kept your payment the same with the lower interest rate, because remember that interest rate is on the outstanding balance of the money, you're accelerating the payoff. You have more money going paying down the principal, which is going to then get you out of debt faster. Now, when we're looking and doing a loan analysis for individuals, we're going over and we're doing the math on somebody's personal situation, so you know exactly what the deal is with how much you're going to save and what impact it's going to have on your situation. So let me go through just an example here. You have an example of somebody with a $250,000 loan amount on a 30-year mortgage at 6.5% interest. The payment ends up being principal and interest of $1,580.17. Okay, so somebody's been paying on it, say, 5 years. Okay, that's 60 months. After the 5 years, the balance, they've paid down that loan. Okay, now remember, they've made $1,580.17 over 60 months. That's $94,810.20 in payments over that 5 years. Now they've paid their principal down to $234,027.44. Okay? Now, let's look at the situation. Would they benefit from refinancing their loan at, say, 4.75, refinancing it on a 30-year mortgage? Okay, so we turn around and do the new loan amount then is $234,027.44. We're going to keep the payment the same of $1,580.17. Okay, guess what? They're going to have that mortgage paid off in 223.38 months. Okay, now let's remember, now we got to take into account that they've been paying on it for 5 years. So we're going to take the 360 months minus the 60 months, right? And that leaves us with 300 months. 300 months then minus the 223.38 equals 76.62 months they're going to actually save in lowering their interest rate. Now think about that. They're going to lower their interest rate. That is actually going to give them they're going to then save $1,580.17 a month. That's going to then give them $121,072.63 savings by them lowering their interest rate. Okay? Now, that is a huge, huge savings. That's why it's important for people to take advantage of lowering their interest rate. Now, you can actually get into looking at if they do then save that many months, and that's how much they save in payments. But then think about it, if you were to invest that money or to pay off some other debt, I mean, that ends up having a huge impact on that family's financial future. Okay, so another thing is looking at the fact of, as far as with even debt restructuring and paying off debt, if you're able to accelerate the payment of debt, if you do a debt consolidation loan and pay off some credit cards, pay off a car, pay off some other debt, and you have more extra cash to pay down the principal, you could save just an enormous amount of money over the course of the loan. Instead of making, you could make minimum payment on a credit card, or you could actually start paying down a lot more of that sooner because you did debt restructuring. So listen, what I want you guys to do, if you have any questions on this, give us a call at 262-650-9890 so we can run across the different scenarios that you have for your personal situation. And we could then have a roadmap for you to get out of debt or to accelerate the payoff of your mortgage sooner. Take advantage of these low interest rates. I mean, this is a once in a lifetime opportunity. So, I tell you, if you're buying or whether you're refinancing, now is a great time because these rates are extremely low. So listen, thanks for tuning in, and I will talk to you next time. Thank you very much.